All right, all right. What's going on, everybody? Hope you guys are having a great night. Welcome to our session. It is our open office hours. We are about to get rolling this evening. Hope you guys all had a wonderful, wonderful day. We are going to get rolling tonight. So I want to welcome you all here to our Stocks on the Rocks session. Guess I should turn my camera on so you can see my face. I'm your host, Chuck Fulkerson. It looks like Herman is in the house. So Herman, I'm gonna make you a co-host, man, so that you can turn your camera on and you can speak and share, man. I always love to have you chime in and add color as you so choose. That's awesome to have you in here with us, man. So welcome aboard.
Thank you, buddy. I appreciate that.
Yeah, man. Thanks for being here tonight. For those of you guys that don't know, Herman is one of our instructors, and he's an amazing instructor at that. So glad that he jumped on tonight. So the purpose of tonight really is just to kind of give you we do a broad level overview, if you will, of what's happening in the markets, what's going on, what do we see, what do we think, what do we feel overall, especially after the pullback that we've had recently, and how's that impact you? And then the other thing that we do is we pour ourselves a drink. I call it Stocks on the Rocks. So this is tonight I'm doing a little Brimstone by Balcone. So those of you that live in Texas, this is a Texas whiskey. It's done in Waco. And for those of you that don't know what Waco is, it's where Chip and Joanna Gaines do their thing, I guess, which is a big deal for them. But this is it's a really good whiskey. So for those of you that are whiskey drinkers, I would highly, highly encourage this one. If it's something that you're so ingrained with. So that's what I'm having tonight, as we're going to just kind of take some time and review and talk about the markets. I've got the chat functions turned off for the whole group, because sometimes when you put things out on the web, people don't always behave. And so if you have a question, type it in the chat box and I will make sure that I do my best to read it, so that I get everybody's attention, so that I can make sure that everybody is well taken care of. So I want to start first by taking a look at, what have the markets done in the last couple of days? What have we seen really the last 2 days, and what has that pullback we've gotten come from, right? So the thing that I'm looking at right now, overall, is where do we see the market pulling back to? Well, we've pulled back to this area here, which includes a gap, and this area here that includes a gap. That's a pretty important level. I pay attention to gaps in the S&P, and we really want to pay attention to gaps, but almost more importantly than the gaps would be the fact that over the last couple of days, we've seen this market pull back in volatility significantly. I mean, that's a significant drop in the VIX over the last few days. And Herman, I'm not sure how closely you watch the VIX when you look into your positions, but I spend a lot of time looking at the VIX. Now I don't have the VIX up, but if I pull up the VIX, you'll see it very, very clearly. The VIX is the actual volatility index of the S&P 500, and we hit this huge gap up on the VIX all the way up here to 22, and then it sold off very, very strong, which tells me that we're seeing some of those options premiums, some of the volatility being sucked out, a lot of those options premiums, and the market saying, okay, maybe we did find a little bit of support here.
Sure. Quick question. How related is for you the VIX with fear and greed?
Well, that's something that's always been said, right? Is that the VIX is the fear and greed indicator, right? When the fear is high, it's time to buy. When the VIX is high, it's time to buy, because people have over exaggerated their fear, and sometimes you're going to get really good buying opportunities. And when the VIX is low, it's time to go, because you got too many people that are too complacent.
Okay, because we have seen something similar in the crypto market. We have a fear and greed indicator, and we have something very similar. Well, I know the NASDAQ, it kind of relates it's kind of insane with the crypto. So
yeah, and the NASDAQ will relate very similarly to the crypto market. I think a lot closer than what some others will. But when I take a look at what we're seeing in the VIX,
Yeah,
these
definitely.
huge moves down make me feel, I will tell you, this morning when I was in our trade room this morning and I took a look at the spiders, I wasn't super bought in on the rally. And the reason I wasn't was because if I pull my volume up, my volume the last 2 days, what have we noticed about our volume the last 2 days? Anybody? What do you notice about the volume the last 2 days? Well, what I noticed more than anything is that my volume on these 2 bullish days is, I don't want to call it anemic, but I certainly would call this below average volume, right? I think it's fair to say that our last 2 days have been below average volume. And if I look back simply at my red volume bars and my green volume bars, what do you notice about just about every red volume bar? Every red volume bar is above average volume for the most part, and every green volume bar is below average volume. So while I think that this is a really good demand level and we got a really nice bounce off of it, and that bounce off of that level, while I think it's a pretty good level overall, we pulled back. I want to say in the S&P it was about 7%. From the high. So if I look from the high to where we pulled back, it was not quite 7%, 6%, right around 6% from the high. I will tell you, my gut tells me, if I look at this on a weekly chart, that yeah, this might be enough of a pullback, and it's right dead nuts on a 23.6 retracement of this weekly move. So for those of you that are technical traders, you know how important these Fibonacci retracements can be. And if I add my 23.6 and my 38.2, you'll see that we got right at that 23.6 retracement and are starting to see a little bit of support. Now, why do I think that level matters a little bit? That level matters a little bit is if there's enough automated orders sitting there waiting to get triggered. Once those orders get triggered, then you've got a pretty decent entry, right? And so that entry is a pretty decent entry. The question is it a long-term hold? Right? Is it a long-term, is that going to hold long-term? And what I'm looking at right now, to me, the single most important level that I'm looking at right now is this area right here. Right? And we are in a plethora of earnings this week. Right? And I say a plethora of earnings. I mean, we've got stocks like Meta announcing earnings. Meta has earnings tomorrow after the bell. You've got Tesla announcing earnings. Now, Tesla, by the way, announced earnings today, but it looks like they're trading in post market at about 163. So Tesla right now is trading somewhere up in this region here. If I were to put that in there, I can see by the bid and the offer up here that Tesla is up. And so, we do have the Tesla market, which is giving us a little bit. And so, yeah, and Jim over on YouTube points out that we do have 2 days in a row of higher highs and higher lows in the spiders. Actually, it's 3 days in a row of higher highs and 3 days in a row of higher lows. So, I think that the announcements we have this week are going to be very telling. What I said this morning in our live trade room is that as an investor, what I am right now is I am a cautious bull. So as an investor, I am a cautious bull. And as a swing trader, I'm still a fairly aggressive bear because my downtrend hasn't changed. 2 good days does not change a strong downward trend. And if the S&P gets back up into this region as a swing trader, this becomes to me a really nice, strong potential turning point. Oh, if you've never had this brimstone, by the way, you got to get one. It tastes like a campfire in a glass. Super smoky, 106 proof. I approve. But anyway, so I would start looking, and one of the things that we did this morning was we said, what are some bearish opportunities that if the market either A, breaks down, or B, rallies up into supply, is going to give me a good swing trading opportunity? And then what are some more bullish positions? Because if I'm an investor and I'm using weekly and monthly charts, this to me could be a really nice, cautiously bullish entry. So is it possible to be both bullish and bearish at the same time. Well, sure it is. I can be bearish in the short term, yet cautiously bullish in the long term. But I will say this, and I said this morning in the room, and I've said it in a couple of our other sessions. If the market drops below 49.53, if we get below last week's low, all of my cautious bullishness goes out the window. I am no longer a cautious bull, right? If the market drops below that 49.53 number, the cautious bull goes out the window, and I spend a bit more time looking for bearish positions. This 49.53 represents the low from last week's low. And if we get lower than last week's low, then my cautious bull goes out the window. Now, why is that? The reason for that for me is because I am very big on the 8 and 20 investing system. When we have price below the 20-week moving average, that to me is a sign that says it's time to get out of Dodge. Now, I still want to get lower than last week's low to confirm that. And so technically I'm still not out of Dodge. I'm just a cautious bull for longer term investment style, as this weekly pullback is a really good buying opportunity, but only for high quality stocks that you wouldn't mind being an owner. Right? So, great question that I got in the chat, and I know not everybody can see everybody's chat. Question was on crypto halving at this point. So, if we look at crypto, right? When you say, Herman, when we talk about crypto, the question was, can you comment on the crypto halving at this point? Do you mind giving a little color to that?
Yes, hang on.
Oh, I thought I lost you. Okay.
Yes, I'm here. I'm sorry.
All right, go ahead.
So the halving happened last week, which means now is instead of mining 6.25 coins now, whenever they find one of these blocks of Bitcoin, which is hashing, that's the terminology. When they do this mathematical equation, they hash a block. Now it's at half of 6.25, 3.12 something. So it's going to become more scarce and more scarce every time. So I believe the halving only is going to do is make Bitcoin a lot more bullish. Now, we do have some external factors like the war that we're starting to see overseas, and still the war in Ukraine, and all these external factors that it might influence the NASDAQ for now. But eventually, when just to take as a reference, on prior bull markets in Bitcoin, it depegs from the NASDAQ eventually. Because one thing is technology and another thing is financial situation. So you got to be really aware. We are in a very bullish area on BTC, mostly on Bitcoin, and some altcoins are going to probably follow. Still have to be a bit more cautious because it's still an investment. But yes, halving is going to make it very explosive pretty soon. You also have other coming up like ETFs in Japan, ETFs in Australia, and ETFs in China, which means they need to now buy Bitcoin in the open market. I know that they've been contacting private rings so they could buy Bitcoin directly for miners, but many miners are not selling, and that was part of the presentation that we did last week. You guys could come and watch the video. We did an extra session with options. It was Monday with Corey. You guys could see the presentation that I show you why we're so bullish in BTC and why Bitcoin halving is going to make it pretty much a big impact on this year. Pretty much, it's just what we're thinking.
So essentially, what the halving is going to do is it's going to decrease the amount of available supply, even when something is mined.
Yeah, and not only is going to decrease, it's increase. So if for those of you who don't know, Bitcoin, only 21 million Bitcoins will be printed. Right now, we have about 19.4 billion Bitcoins already, 19.45 million already printed. And we only have another 1.5 million to be mined in the next 140 years. So it's already scarce. On top of that, I remind everybody that we probably lost an average of maybe 5 million Bitcoins in Some people think it's 3.5, some people think it's 4, some people think it's 6. I think it's about 5 million Bitcoins been lost. Because every time you do a transaction, it's the same thing as fiat currency. If you lose your fiat currency, nobody's going to come to your house and say, hey, listen, you lost a couple $100. Nobody's going to do that. So once it's gone, it's gone. So that same thing happens pretty much on the Bitcoin. Once you transfer the money and you miss a number, or you misplace your key, you misplace your wallet, your money's gone.
Because it's physical, because there's the physical wallet element that people lose the wallet, or they don't have the wallet, or it's in a hard drive somewhere.
Yeah, and because it's really a code. What Bitcoin really is just a digital code of numbers and letters. And if you lose that actual code, then you lose your money.
Okay. So I think the thing to think about is when you look at the halving on Bitcoin, what it should do, because if you think about it, right, I'm going to use a chicken analogy. If an egg always hatches out 2 chickens, and eventually the egg only hatches out 1 chicken, chickens become more valuable because the same number of eggs make half the chickens. And so in Bitcoin, we're not going to see the same availability, and that could have a longer term ramification. Now, if we look at this on a weekly chart, right, we go way back, and I'm looking at this is just the future, so I can't go too far back. But looking back at Bitcoin just on the futures contract, then we do see that we came above this resistance point over here. We've got a nice rally up and a bit of a pullback. I see in Bitcoin a really strong demand area down here at 52 by 5751. There, 52,000, I think, is a really great demand area. Do I know that we're going to make it down there? I'm not sure, but boy, is that a really good level for a potential reversal trade. I also see below that a bit of a trap level here as a swing trader. A little wick over wick that's kind of hidden there as a bit of a trap level. So if I'm looking at this more as and once again, I don't day trade the Bitcoin, I would definitely be more likely to swing trade and be a little bit longer. Then I'm going to be looking for a confirmation entry on this first one with a limit entry down here. And again, it's more demand and less supply. I think that's the way to put it. So, so overall, my thoughts on the markets right now: SPX, mildly bullish as an investor, fairly bearish as a trader. And so then we start to look and say, well, what are some of the stocks that we would pay attention to from a bearish perspective or from a bullish perspective? Well, when I look at my sector comparison chart, meaning over the last 20 days, I've got all my different sectors here. The market over the last 20 days is down 2.97%. And so I look at this as a comparison grid to see, well, what sectors are down as much or worse than 2.97%? Well, which is the worst? The worst is XLY, which are consumer discretionary stocks. Consumer discretionary stocks in the last month are down 5.3%. Whereas energy and utilities are up almost 4%. Basic materials are down 3.58, and then technology is down 5.5. So it's almost hard to believe that our weakest performing sector is technology, because that hasn't really been a thing. But tech has been our weakest performing sector. And so as I'm looking at individual stocks, I now have to then start taking a seriously hard look and saying, what are some of the tech stocks that look weak? And God forbid, I know nobody likes to say, it's almost like a sin to say that one of our weakest tech stocks over the last few months has been Apple. One of our weakest stocks over the last few months has overall been Apple, as we have been unable to create a new swing high with any of our demand levels. Now, we do have earnings coming up, and the earnings that are coming up are going to make me a lot less comfortable to short Apple right now, because my earnings are coming up next week on May the 2nd. But if we get a move on Apple that is unable to get above this swing high, so if we get a rally up, but we have an inability to get above this 178, I would look for Apple as a strong bearish play, because I think that Apple realistically can make it down to this 153 area. I think that when I start looking at some of the more bearish stocks in the tech sector, Apple really, you don't have a lot of great demand in here until you get down to this 153, 154 area. So around earnings next week, this is something to kind of keep an eye on and pay attention to, is if we are in the earnings season and we stay below this level, if we get a gap down, I think Apple is poised for a potential gap and go trade to run down to like 154. I think that's one of the positions I would look for. Now, what is the definition of a gap and go? Here would be a gap and go. We gapped down, price still hasn't gotten above that first candle's high, right? That's an example right here of a gap and go trade. Now, on the, on here we gapped down, and this was a bit of a gap and go. Then we wound up getting a quick rally back up, but that was still unable to put in a new high. And the inability to put in a new high really showed a lot of weakness in Apple. So Apple, as being the market leader for a number of years, is definitely falling out of favor. Now, why is Apple falling out of favor? Because other technology stocks have come in favor, and Apple was really late to the party in some of the price movement. And so stocks like NVIDIA, which, by the way, God forbid, but NVIDIA could be the next one. NVIDIA, I think, could be the next one that maybe got a little bit overcooked, and we could see NVIDIA start to come down a little bit. Now, NVIDIA doesn't have earnings until the middle of May, so I wouldn't be mad at you if you looked at NVIDIA right in here around 850 and decided that this has a really strong potential move down. If we're unable to put in new highs, stocks tend to get weak.
Quick question, Chuck. Sorry, yeah. I got my call dropped out, so I have to log back in. Hopefully, I answered the question for the crypto.
Yeah, you did great.
What's the percentage of NVIDIA down from its high?
So NVIDIA from its high at its current price is down 15.2%. At its low, it was down 22% off its high.
Okay, because I just want you guys to make a quick comparison where hang on, I got where if you look at cryptos also, you see some leaders in the Nasdaq. Well, you see the leader in cryptos is BTC. If you look at the percentage of BTC going down, you'll see this is not as volatile as it used to be. It's getting less and less. It's becoming more consistent compared to previous halving. So if you look at the percentage, which it was his high, is about 74,000, and now it's sitting around 65,000, 66,000. I haven't checked in the past hour. Percentage-wise, it has not become as volatile as it used to be. So it's becoming a better investment in general, not just for us, but in general.
Yeah, it definitely opens up more doors for people that are willing to get into there. So, but I think that though, some of those, not all of the tech stocks, by the way, right? Microsoft is not playing around. Microsoft is down a bit, but it doesn't have that same bearish look overall that NVIDIA and Apple do. Although Microsoft also the inability to put in a new higher high. And Microsoft is one of them that I would be remember we talked about being an aggressive bear. We've got earnings coming up in Microsoft in 2 days, but boy, is this a great supply level right here in Microsoft, which lines up extremely well with our supply level right here in the SPY. And so as a swing trader, I'm still going to be a fairly aggressive bear. And my sector that has been the weakest is now technology, and I would consider that technology is where I would start to look for some of those weaker opportunities. What about if I'm a more aggressive, if I'm more of a cautious bull and I'm willing to be long? Well, if I'm more of a cautious bull and I'm willing to be long, I'm going to want to be long high performing stocks that give me I've got good solid fundamentals. I've got stocks that I'm proud to be an owner of, right? I don't want to go out and get stocks that I'm embarrassed to tell people that I own. It's stocks that I want to be part of that company. I want to own that company. And so there's a couple of different ones out there and a couple of different ways to find them. But ultimately, when I look at, for example, stocks that I might want to own, One of them that I looked at earlier today, which is in a really good position, was VRT. Oops, typed that in the wrong spot. Type that to John Sr. VRT. There you go. Vertiv Holdings. Man, look at this candlestick that we had yesterday. This is a chef's kiss style of candlestick. Price drops down into a demand / support area. We get a doji candlestick in a very, very, very well-performing stock, right? A well-performing stock with really good overall fundamentals and a really good potential to move up. And there are other stocks that have similar, but some of the stocks that had been performing like that, like for example, Supermicro from 1229 is down. What's our percent that we're down here in Supermicro? 38%. At its low, it was down 46% off of its high from just a few weeks ago, right? And so a lot of these stocks, I want to look for stocks that are typically the best of the best, but you would have very tight stops. So for example, in VRT, now, by the way, it's got earnings coming up, so do your own research, make sure you make your own decision. Let's say I'm getting long VRT. Well, if I get long VRT and I decide I want to be a buyer, my stop goes right below this low. So that if I'm wrong quickly. I am a very cautious bull on stocks that do have good fundamentals, but I don't want to hold it and allow myself to get into a position where it can turn into a problem for me, right? Another one is Orion. Another one, like I said, earnings coming up in the next few days, but I really like this price action coming into an area of demand. So let's see what earnings does for this, and if this pulls us into this demand area for a really strong rally to head back up from here. There's a couple of different ones in here that are pretty strong and worth taking a look at. So, all right, so that's my thought overall. You know, I like to do these for about 30 minutes when we come on and do these open office hours. I want to open it up for questions. So if you have a question you want to type in the chat box, go ahead and type it in. I can see everybody's chats. I know everybody else can't see everybody else's, but I did that on purpose. But if you have a question you want me to review, now's the time to type it in. Because that's really what these sessions are about. It's about being open office hours and answering any questions you might have. I normally have Corey on here with me, but last week he was without me. And so last time he was without me and had to do it alone. So this week I told him I would do it alone. So Herman was kind enough to jump on and join me.
Anytime, my friend.
Awesome.
You don't drink any wine, only bourbon or whiskey?
You know what? I am a big fan of things that are that used to be grass that now go well in my glass.
Okay.
All right, everybody. Well, that's all I got. In case if nobody's got any questions, I'm going to log this thing off. Hope you guys had a great night. Hey, if I taught you some things tonight and you think you're interested in learning a bit more, go to TradersArmy.com. I'd love to have you come and join our live trade rooms. Armand is one of our instructors. He teaches 4 or 5 classes a week for us. I'm in there a couple of times a week. Corey's in there a couple of times a week. Go to TradersArmy.com. We'd love to have you join us. So thanks so much, everybody. Hope you guys have a blessed day. I'll talk to you soon. Peace.
Bye, guys. Thank you.